But anyways, we're gonna go ahead and get started. So as always, starting off with the economic calendar, we can see that Monday we did not have any news at all whatsoever, but typically, well, I'll answer this or read this. Anyone else having audio issues? Is the audio good? Alright. Alright, we'll do that again. But starting off with the economic calendar, we can see that Monday did not have any news at all whatsoever. So typically with the economic calendar, you guys already know if there's news on a day, that means generally it's a little bit higher probability. If there isn't news on a day, that means that it is lower probability. But there is a day that is exempt to this rule, and that day is Monday. So Monday is one of the most, I'll say, informational days within the week. Right? You'll never see me trading a Monday. I personally don't look for things to do on Mondays. There's very, very, very few times where there's a real setup there. But Monday in and of itself, just because there isn't news, just because there is news, you don't want to just write it off as, don't really care about this day. Because this day in particular, there is a lot to it. And we'll cover that later on. But typically what Mondays do, yes, they're hit or miss, somebody said it. They're either very consolidative or they expand, right? Hit or miss, 50-50. Now, with this, if a Monday ends up expanding, and if our analysis is correct, the analysis that we'll talk about later in this live stream, then Monday this week should remain the low of the week. All right, now Tuesday, the day after Monday, we can see we don't have any news at all whatsoever. So in terms of intraday trading, it might be a little bit more difficult to gauge something. Wednesday, we have FOMC. So Wednesday is likely to be one of the more volatile days of the week and will offer something in terms of the weekly range. Thursday, we have 8:30 a.m. unemployment claims. So Thursday is likely to be a good intraday trading day. And then Friday, 8:30 news, it's likely to be a good intraday trading day. And in terms of high of the week, right, we could likely see Thursday or Friday be the high of the week. And as we do these Monday live streams, you've probably noticed a theme, right? Thursday or Friday usually caps the weekly range, whether it's bullish, whether it's bearish, regardless, Thursday or Friday, more weeks than not, will be the higher low of the week. So that leads into something else of, if you know that Thursday and Friday is likely to be the higher low of the week, and you have narrative established, then seeing or forecasting the higher low of the week early on into the week can become a little bit easier. And we'll go further into that. But we'd want to see if our analysis is correct, and we'll talk about that. Monday be the low of the week, Thursday, Friday be the high of the week, and then Wednesday offer distribution, right? But going into the chart, we have the S&P 500 on the left and the NASDAQ on the right. Now, going right back to the basics of easy liquidity pools, right? Coming into the week and observing how Monday closed. So as we can see, Monday opened up, expanded, and closed higher. So with that information and seeing where price is at the current moment, what do we have sitting right above market price? Highs, liquidity, exactly. Now, what in particular about these highs? What stands out? Unsymmetrical. So this is a previous SMT, and this is also an SMT that we talked about to gauge for, price continuing lower, but didn't happen, ended up reversing right here. Now we have information, more information. So we can find use of this previous SMT and looking at where price is respective to these highs, we can tell that price is more likely to draw to the highs than it is to come down here and draw towards these lows. So we'd want to see this week as a weekly objective at 26,045.5 and at 26,123.5 on NASDAQ. We'd want to see this be a weekly objective, right? Especially this high right here. And on the S&P 500, that's 7,036.25. But going a little bit deeper, right, dropping into a 4-hour chart. We can see that this was the open of Monday right here. All right, so Monday opened up and then expanded higher. And what has price left as a result of that? A gap, right? Now going from a 4-hour chart to a 6-hour chart, what can we see as well? There's a 4-hour gap inside of a 6-hour gap. All right, so this is a very high probability gap right here. And even if we go to a 1-hour chart, what do we see? What's there? A 1-hour gap. So there's multiple different time frame gaps in alignment with each other. Whenever you see something like this, and as well, the S&P and the NASDAQ both have these gaps, right? It's not just one asset. Both of these assets have all of these time frame gaps, in alignment with each other. Whenever you see a gap like this, this is very, very, very high probability. And these are the types of gaps. If you go and look at all of my previous trades, right, that I've posted probably within the recent 6 months, you'll see all of them pretty much have this right here, this exact same characteristic. So we'd want to see, this gap be used to support price higher, going towards this high on the S&P, and for the NASDAQ to trade inside of this gap, and then have this gap propel price higher to our weekly objective. All right, very simple, very straightforward analysis coming into the week. And like I said, we'd want to see Monday remain the low of the week. But now doing a little bit of review, since we did not do a Friday night stream. So here we're looking at the S&P on the left, the NASDAQ on the right on a 1-hour chart. So we had to pull out the bar replay for this, and currently where it's sitting at was 5 a.m. on Friday, so right before the morning session opened up. Right, this is the current price data that we're looking at. We can see that Thursday more so ended up closing in a consolidation, and on Friday the price action before the morning session was still trading within that range. So anytime you see something like this where a day closes out and it's more so consolidative, right, it doesn't really get anywhere, and Asia session and London session don't break through this range and they stay within this range, come by the morning session, that typically means it is a difficult trading day. Right? It doesn't mean impossible. It just means you need a little bit more information on your side in order to confidently determine where price is likely to head to. And this is what I call an quote-unquote if-then market. Right? You really have to look at both sides and take it for what it is. Right? If price does this, then we'll look for this. If it does this, then we'll look for this. Right? Looking at it from both angles. Now, going from a 1-hour chart and understanding this down to a 15-minute chart, right, we can see we have the 9:30 open right here, and right before 9:30 there was a daily cycle sequential SMT. Okay. And this daily cycle sequential SMT formed underneath the true day open as well as the true market session open. Now, what is important about this SMT? Right, what do we notice with London sessions low? Same time. It's a symmetrically timed SMT. Now, just because a SMT is symmetrically timed doesn't guarantee that it's going to work, right? Nothing is ever 100% in price. And whenever you're dealing with an if-then market, right, you have to really wait for price to show you what it wants to do. So let's say you identified this sequential SMT right here. Right? Does that mean you immediately buy the market where it's at as soon as it forms? No. You have to wait a little bit, right? So now, going from a 15-minute chart to a 5-minute chart, right? We can see right at 9:30, our favorite time, price does trade higher, right? But then it falls right back within the range, going right back to this low that printed the SMT. And while that happened, we can see an opposing SMT formed. So 90-minute cycle crack in correlation, right? So at the time, and the tier 3 people, you guys were here, we saw this live. Whenever you have two sequential SMTs back to back happening in two different directions, right, at the same time, that leads to low probability conditions because you're playing guessing games with the market, right? And you don't want to play guessing games, right? We're not gamblers. We don't try to guess. We want probabilities to be on our side. So let's say coming into this day, there was the underlying factor that we were bullish. Okay, we would expect this 90-minute cycle to fail. But since we didn't have that underlying factor, the best thing to do whenever you're unsure, and even just trading the morning session in general, this is probably one of the best setups. If you're ever in a moment in the morning session, and this is important, right? You want to write this down, where you're unsure, right? Price, you could frame both sides of the market, right? There's no higher time frame bias or higher time frame narrative, or even with the higher time frame bias and higher time frame narrative, right? Things are just unclear. The best thing to do is wait for a 5-minute fair value gap, right? And like I said, this is one of the most, I'll say, easiest trading models out there. And for the quicker pace people, you can substitute that with a 1-minute gap. But if you want just simple 1, 2, 3, you have a crack in correlation, right? Wait for 9:30, wait for a 5-minute gap. And as we can see, 9:30 opened up, created that opposing crack in correlation, consolidated for a little minute, created a 5-minute gap. The S&P 500 retraced into this gap and then used that to support price and propel price higher. And no, right, this is not hindsight. Some people that were in the live stream made money from this move. So back test this. Go back into your charts and look for this very thing right here with just a crack of correlation, 9:30, 5-minute fair value gap. But now looking at GBP USD. So I got a few questions on the pound trade that I took, and we really haven't talked about Forex much this year, but we'll discuss this trade, right, and how you could have seen this coming. So looking at the pound, right, there's something that occurs, particularly with Wednesdays, right? Once you have Monday, Tuesday, Wednesday, once Wednesday closes out, more times than not, and some of the older people that have been here for a while, you guys already know what this is, but I'll go ahead and introduce this idea to the newer people. But more times than not, whenever the first 3 days of the week plays out, you can be very confident that the higher low of the week is in. And if a 4-hour fair value gap occurs after the first 3 days of the week print, that is a very high probability gap. And that sets up for explosive moves, especially under the criteria if there's unsymmetrical highs, either above market price if you're bullish, or unsymmetrical lows below market price if you are bearish. So we can see the first 3 days printed, right? Monday, Tuesday, Wednesday. Thursday opened up, created a fair value gap, right? And then Friday dropped into this gap, traded higher, going for these highs right here. Right, very simple. Is anybody confused about anything? We're on the same track. We're on the same page. And apologies if this live stream wasn't as good as the others are. My focus is a little bit thrown off right now just because I'm not at my setup. But now we can do some Q&A. Please post. This is loaded into the WAP. Can't get audio. Close and reopen. Try browser. Yep. I'll give them a thumbs up. It'll be uploaded ASAP. Don't worry. Were there anything suggesting a bullish narrative before 9:30? No. There were no Kraken correlations there. There were no, nothing tipping its hand in price. The only thing that was there was that bullish daily cycle sequential SMT, right? Just that by itself. There were some bearish cracks made at the end of the previous week, daily TPD on Friday, weekly cycle attached. It's valid to consider analysis on Monday. Or should cracks be made? Yeah, Kraken correlations made in the previous week, disregard them. Coming into a new week, think back to what we talked about within our very first live stream. Right, as soon as Sunday opens up, everything to the right of Sunday's open, that's the information that we use. Everything to the left, we use that as targets. This is different from Forex. 4-hour gaps chill in the second half of the week. Why not take it on the Euro, cleaner 4-hour gap earlier in the week? Also, this is appealing as the bonds was consolidating while Forex, or index futures was consolidating while Forex expanded Monday and Tuesday. Reason why I didn't take the Euro is because the pound was stronger. There was a micro Q1 and Q2. Yeah, but more times than not, if you use a microcycle sequential SMT to confirm a daily cycle, whenever you don't have narrative, right, it's tricky. And you'll get a lot of accidental stop outs. Kraken correlation before or after 9:30 doesn't matter. The only thing that matters is a 5-minute fair value gap after 9:30, leading in the direction of a Kraken correlation that gets made. When do you trail stop loss, and which areas do you set it and why? So we'll take this for example. So I highlighted this trade right here, right? I said if I were to take this or to take a trade, entry in the 5-minute gap, stop loss right here, target somewhere up here for 1 to 2 risk to reward. As soon as you get an entry, especially within a gap, price retraces inside of the gap. As soon as it shoots higher and claims this high right here, so within the 3 candle sequence, right, 1, 2, 3, for the fair value gap, as soon as price makes a higher high after retracing into the gap, that's whenever you trail the stop. Because more times than not, if price consolidates, comes down, trades back inside of the gap, it doesn't hold the same strength as it is whenever the gap is fresh, right? Does that make sense? For the 5-minute gap simple model, you look at 5-minute gaps made strictly between 9:30 and 10 o'clock. No, 5-minute gaps made after 9:30, following in the direction of a Kraken correlation. After daily cycle SMT, what CSD would we look for? CSDs aren't really that important if you don't have narrative. But if you wanted to use a change in the state of delivery, just as is by itself, for a daily cycle SMT, you could use a 15-minute or a 1 hour. Reasonable place for a stop in the 4-hour gap in NASDAQ, respecting the gap. Remember, stop loss is just invalidation. When considering 4-hour, 6-hour gap nested within, don't they need to be sequential gaps for high probability, or is that not required? They are sequential gaps. They were created on Monday, and we're currently within Tuesday's trading day. How about 2 a.m. TPD? Is there one there before we go on the charts? We'll get into TPDs whenever the time comes. All right. In Forex, do you let yourself take 4-hour gaps in the second half of the week? Usually for indexes, like the first half of the week? Yes. But either or, right? It's the same principle for all asset classes. Why was Friday an if-then and not one-sided bias? We didn't have anything supporting why price should do one thing over another coming into the morning session. I've heard you say to look for a gap or order block when going into a lower time frame, higher time frame TPD for entries, but if there is no gap, it is best to look for a swing low to place your stop. Yes, you could do that. What makes a trade that you know will be good for weekly expansion? For example, Monday expansion profile, buying the gap, holding to higher time frame liquidity, yes. And that's exactly what we did, the first week of our live stream. Keep in mind, these things repeat, right? And they're gonna keep repeating. This, if you look at this right here, with what we have presented, if you go on to, actually we'll look at it. We can see this is Monday's price action, right? We have highs resting above market price. Let's look at the first live stream we ever did. Monday opened up, expanded higher, 4-hour gap, highs resting above market price, right? It's the same thing happening right here. Just joined, what did I miss? Everything. Have no audio, but could you cover BTC if you can possibly on what your bullish invalidation is for it to go lower? I'll check the recording. In terms of crypto, I don't have anything in the short term. But if Bitcoin, if there comes a day in the future, within the next 6 months or so, where Bitcoin starts trading below 50,000, then personally I'll start dollar cost averaging it on Bitcoin. I treat crypto like a stock. What about reversal trades instead of the scenario with 4-hour gap, where you stick to it mainly? For reversal trades, TPDs. But we'll talk about that later on. S&P or NASDAQ, which is stronger? Right now the NASDAQ. How to not get mixed up with trading the right asset, since the factors that make an asset stronger. Closer to higher time frame liquidity, S&P PSP closes. For example, we see the S&P made a failure swing on the higher time frame S&P, but the S&P makes a stronger candle to our expected way, vice versa. So there's a higher time frame strength and weakness, and there's a lower time frame strength and weakness. And both are important, but it depends on which type of trader you are. If you're a higher time frame trader, then you don't care about what the short term looks like. If you're a lower time frame trader, then you don't care about what the higher time frame strength and weakness looks like. Now, the best of the best market conditions come about when both the higher time frame and the lower time frame strength and weakness are in alignment, which it doesn't happen often, but whenever it does, you get trades, like this. How can we take trades like you during London? Can you please teach us what time and what level should we place our limit inside of the 4-hour gap, NASDAQ or the S&P? It all depends on the type of trader you are. Right. If you're somebody that wants to, we'll do it like this. Let's say you're somebody that wants to absolutely ensure an entry. Then you'll have a limit order right at the low of the gap. Well, the high of the gap and the bullish gap, but the low of this candle right here. All right, that's to absolutely ensure an entry. If you're somebody that wants, a little bit higher risk to reward, you put it at the 0.25. If you're somebody that doesn't care about the market running off without you, you put it to 0.5. So with setting limit orders and trading within specific areas of gaps, you're either going to sacrifice getting an entry altogether for risk to reward, or you're going to sacrifice risk to reward for a guaranteed entry. And it's all dependent on which one you want to sacrifice, right? Do you want higher risk to reward, better or guaranteed entry? Right, those are the two things. The statement higher time frame turtle soup will make lower time frame failure swing, vice versa. Can you give me more clarity on it? For example, there's a weekly cycle, it's going to SMT. We expect turtle soup or failure swing to be followed on which lower time frame cycle? Specifically the daily cycle, right? But that doesn't always happen. Just like with the strength and weakness thing, very rarely is the higher time frame and lower time frame strength and weakness in alignment. So very rarely will you have that proper alignment come about. Odds that NASDAQ 4 hour, 6 hour gets left open from your experience, not too terribly high, but it's always a possibility. When trading the turtle soup asset, how do you determine your stop loss? If a TPD is there, confirming it. Or if it's within a higher time frame level, you put a stop respecting the higher time frame level. Are you bullish on DXY? No. Do you ever trade the afternoon session apart from FOMC? No. Reason being is why would I want to? Logically speaking, if we know the morning session in terms of day trading has higher probabilities, why would I want to position myself in the afternoon whenever I know it's not going to be as good compared to the morning? At the end of the day, it's all probabilities with what this is. Could you explain why the market reversed from the PC? Could we use it as an order block? We're talking about this right here, or are you talking about this? This one? So this is not a precision candle. All right, this is just the swing low that got made. For entries, have you ever done or thought about setting a limit order at the start of the gap and then set other limit orders deeper inside the gap? Yes. And that is very, very, very beneficial if you have two gaps. If you have two gaps that are, right beside each other, like this, or very close in proximity, and it's very hard to determine if one will be left unfilled, if one will be filled, or you can set an order here and an order here to get that happy medium. But back to this. So for the person asking, explain why price dropped lower here and then traded back higher here. Contrary to popular belief, you're not going to know every single fluctuation in price. There isn't a person that walks this earth that knows the reasoning behind every single thing with a great deal of accuracy. But that's why we have Mondays, right? That's why we have the function of Monday, which we'll talk about it. Monday is extremely, extremely, extremely informational. And if you wait for Monday to close and then gauge information from that or from there, then you'll have probabilities on your side. That's why we always do these streams after Monday closes. Now, in the past, like last year, for example, we used to do streams Sunday night. and then give predictions then. But it's so much more beneficial just to wait for the close of Monday. Since you talked about it already, can you confirm sequential gaps? If on all assets there are gaps, 6 hour, 4 hour, 1 hour. A sequential gap is just a gap made on one day and then utilizing it the following day. Specifically, with those. Very simple, but very, very beneficial. What core content videos can we expect this weekend? TPD and a video covering narrative. Does the gap created need to have been formed out of SMT? No, it does not. All right, like I said at the beginning of this year, you're going to know when to do something, even whenever there's no SMT. Under certain circumstances, like what we have here. Now, contrary to that, there are going to be times in the market where you're left, a little bit clueless, but that's normal. Like I said, you don't need to know everything about everything in these markets. The only thing you need to know is whenever probabilities are on your side, so you can put risk on. And put risk on the table. Today's 2 a.m. candle. If anything, that adds probability to this. Just tuning in, what did I miss? Full port. We need you to start full porting more. For the newer people here, Vigran, he's the full porter. When does Day start his group? He already started it. When analyzing, is it better to do it on the micro or the mini, regardless of what we trade? The micro has more volatility, but I prefer the mini. But at the end of the day, it's not really that big of a deal. The only thing that's going to be different is the price points. Do you still do live streams in there? Yep. Once I get done with you guys, I'll be headed over there. But they don't even get a fraction of the things that you get. And some people in here are in both, right? Some people in here are with Day and they're in here as well. And they can tell you firsthand. I don't tell even 10% of the same things that I tell them, that I tell you guys. Yeah, streams are 8 minutes long, yeah. But anyways, we're going to go ahead and wrap this one up. So hopefully you all found this one insightful. I'll speak with you all again tomorrow night. So with that.